Hey YouTube, and welcome back to my channel. In today's video, as you can tell from the title, we are going to be talking about the 5 steps that I took to make, so far, almost $200 in 2 months of trading stocks. In this video, we're gonna talk about the 5 steps that I actually took to start making money with trading, and then when you guys have like more specific questions, I'll go on to make other videos. Just a big disclaimer, I am not a professional financial planner. I have no certifications in telling you guys what to do with your money or your finances. I'm a normal person that is just doing this by herself off of her own knowledge. I do have a degree in economics. I do read a lot of books about finance, watch a lot of videos about finance and investing, and I actually do it and I have not lost any money yet. But I just want to make a huge disclaimer that, you have to take everything I say with a grain of salt and use your own common sense judgment to not make any silly decisions off of a YouTube video. The very first thing that I did was I signed up for a brokerage account. So if you want to trade stocks, or you want to invest in stocks or invest in ETFs, invest on the market, you have to have some sort of brokerage account. In the past, what people would do would be they would go to an actual physical firm that occupied itself of doing trades and investments for people, and those still exist today, but given that you're using a live person, they are quite expensive. And also there's been a lot of research done that active trading and active brokers aren't that necessary. Another way to have a brokerage account is actually through your bank. Most banks, if not all banks, have the option for you to set up a brokerage account with them, and you'll be able to make trades through either an app that your bank provides you or a website that your bank provides you. These are pretty good because you don't have to go and involve another entity. You already probably have a relationship with your bank. You have everything already set up with your bank. Your money is already there, so to just set up a brokerage account would be a pretty quick. And they do tend to have lower costs than other options, but not the lowest costs. In the end, I don't use this option, but it's a very popular option to just set up a brokerage account and trade through your bank. There are lots of options, but I think this is the last big umbrella. Electronic trading and electronic platforms that allow you to do trading, like E-Trade. There are so many. These tend to have even lower costs than the firms. They tend to have even lower costs than the banks. I use the Robinhood app, which is an American platform, but there are some European equivalents, which if you guys want a video on those, I can make a video on those. But I use Robinhood. It's an American one and it has 0 costs to trade. I pay 0 commission. It's all mobile. There is no website, but it's a good platform for beginners and people that aren't investing a lot of money. And it's a good way to just get into trading and start learning. It doesn't matter what platform or what way you end up going into trading, because at the end of the day, the stocks are the same. The only difference is the way you're buying the stocks, whether you're using a physical person intermediary, whether you're going through your bank, or whether you're using one of these new platforms that are popping up. The stocks that you go to buy are all the same. Step 2 is research the stocks that you want to buy, research the products that you want to invest in. And in addition to this, you want to research different investment strategies. So for example, in my 2 months of actively investing, and I mean, with all seriousness, I took the whole year to actually really study investing, and that was after I did a whole degree on financial institutions and economics and blah, blah, blah. It took a while for me to actually jump in and start investing, so I can understand the apprehension. But honestly, I wish I started investing in January, just to say. I could have studied all of the theory I wanted to. I would have ended up making a lot more money if I had just started in January. Research your favorite stocks and research investment strategies, because there are a lot of them, and you can find them here on YouTube. I can tell you a couple strategies that I followed and the one I'm following now. One that I followed was the dividend investing strategy, which basically in one sentence is where you buy stocks in large established companies. Think Coca-Cola, think AT&T, think Disney. Companies that are large, established, and also pay dividends. How do you make money on the stock market? Very basically, you buy something at a price and you hope to sell it at a higher price. But it's not the only way. Another way that you get paid through investing in the market is through dividends. When a company is a publicly traded company, it can choose to give percentages of its profit back back to investors. If you own many shares, you'll get paid dividends for each share that you own. So the idea is you're investing in big companies that should have longevity. And there are other reasons why this strategy is good, in the sense that, for example, even during a recession, most companies still end up paying out dividends. So whether the value of the stock goes up and down, you're still going to be making money from those dividends. If you invest in enough companies and you invest enough money, you can essentially get to a point where you're making like $500, $600, even $1,000 a month off of just holding stocks. So that was the first strategy that I got into and that I wanted to follow, but circumstances change. Right now, I'm trying to buy a house here in Italy and here in Milan, I'd like to specify. And so I need all the liquidity that I can have, and I don't have time to sit there and follow my stocks and do all the research to follow specific strategies. So I've been selling all of my individual stocks. The only stocks that I'm keeping are the ETF stocks that I have. So what an ETF is basically, instead of buying one stock, you're buying a package of stocks, and the price is going to be an average of all of those stocks. If one company in that package has a price drop, it's not really going to affect all the other companies in that package. It's a good way to diversify. A couple ETFs that I'm invested in are the S&P 500 ETF with Vanguard S&P 500 ETF, which basically takes the 500 top performing companies on the US market and puts them in a package. So instead of buying one share of Coca-Cola or one share of Apple, you buy a fraction of all of them. I can tell you for sure that these shares don't have a lot of volatility. They don't have as much risk as if you're putting all of your money in an Apple stock or all of your money in a Facebook stock. The strategy that they tell normal investors to follow is to invest in ETFs, because they're like investing on autopilot. They're going to be following the trend of the whole market, and as a whole, the global market economy has gone up. So if you invest your money in an ETF and you leave it there for 10 years, you're pretty much guaranteed that when you open up the ETF in 10 years and you sell it, you're gonna make a profit. You're not guaranteed that with other stocks, because you don't know if Apple or Facebook is still gonna be around or still gonna be as popular or performing in 10 years. There's a lot more risk in investing in individual stocks. You want to diversify. So the third step in how I was making $100 a month is invest in ETFs. Even if you're going to be trading actively, I think everybody has to invest a little bit in some ETFs, because like I said, they're kind of like being on autopilot. They're already highly diversified. You're almost guaranteed that you're gonna make a profit on your money in the long term. And so no matter what you do, buy some ETFs. Specifically, the S&P 500 ETF, the total stock market ETF, but they have index funds for just about everything. The fourth step that I took is to buy low, sell high. It sounds really simple, and it is. The first thing I did was I researched my stock and I said, okay, I'm gonna do this investment strategy. I looked at what everybody else that was following that investment strategy suggested as stocks to invest in. One rule that you also wanna follow is you only wanna invest in stocks that you actually understand. You understand the sector they're in, you understand the company, so that way there are no shocks. If you understand the sector, you're not gonna invest in something that is making bad moves. You know, if that makes any sense. Investing shouldn't be random. Investing shouldn't be betting. It should be something that you're doing with a certain knowledge. These should be educational guesses. Like, of course, nobody knows what's gonna happen inside Apple tomorrow to know that the stock price is gonna go up or down. That would be insider information, and that is illegal. But you do know that maybe Apple has some principles that, in your opinion, their business model is great, and so you're gonna wanna invest in them. Or you know their business model, and so you say, I don't really see the longevity in that, so I'm gonna avoid it. That should be the mindset that you take when you go to invest. So what I did was, all of the stocks that people were suggesting for this dividend strategy, I invested in the ones that I actually understood. Whenever I saw that there was a super big hike in the price, sold. Some of them I was just making, you know, like average return, like a couple dollars. But there was at one point where I made like $75 in Target stock in a day, and I sold that shit because I'm like, I feel like it's gonna come down. The longer that you're in the stock market, the more you're gonna know the average price of a certain stock. And I'm talking about active trading. I'm not talking about investing. If you're investing, you should like invest your money in a stock that you trust and just leave it there, because time in the market beats timing the market, which is something that I think we'll talk about in other videos. If you're gonna be actively trading, often you're gonna get an idea of the average price of a certain stock, and you're gonna get an idea of what is a low price for a stock. Also, using certain indicators, you're gonna be able to understand if a stock is undervalued or overvalued and be able to make decisions off of that. The more that you trade and the more that you actively participate in trading, you're gonna understand what low is, and you're gonna also know when to sell high. You might not know the exact peak, and you might not make the maximum return to make you a millionaire, but that's pretty much the guiding principle to making money in the stock market. And the last step / principle that I follow to make money in the stock market and not lose money is not to panic sell. This is kind of the other half. So you buy low and you sell high, but what happens when you buy and the price keeps dropping? You hold that. I mean, first of all, we already said that you're not gonna be investing in things that you don't understand, right? You're not gonna be investing in companies that you don't believe in, right? So if you invested in a solid company and you actually did your research, like in step 2, the price drop is temporary. If the company has longevity, if you checked the indicators, if you trust the company, the price will go back up. It might not go back up tomorrow. It might not go back up next week. It may not even go up next month, but in the long run, it'll go up, especially if it's following the trend of the rest of the stock market. If you invested correctly, price drops shouldn't scare you. You should know that in the long run, smart investments always make money. I don't want to say always, because you know there's always that 1% chance that the world economy might explode. But even if you see that your IN ETFs are down in value today, they should go up. And I've never sold a stock and and had a loss. I never sold a stock at a loss. If I saw that it was losing money, I just held it. And right now, the only singular stocks that I have are the ones that are negative. But luckily, nothing is negative more than $5. So even if I did sell them today, I would lose $5, but I'm not going to. I do believe that in a month or 2 or 3, that stock is gonna come back up, and so I'm just gonna hold it. Panic selling is something that I should probably make an entire video on, but it's not something that you want to do if you're going to get into investing or trading. Let's check my portfolio right now. Of all of my investing in the stock market, I started about 3 months ago. Yeah, I made a 3.2% return on all of my investing. And if you see the stocks that I still have, like most of them they all did pretty good. It was a good day in the stock market yesterday. As you guys can see, the singular stocks and funds that I have are negative because I sold all of the positive ones. So just to see like my transactions in the last 30 days, I got some dividends for stuff that I had. So for P&G, and thank God that I sold it because the price is dropping again. I had bought P&G 3 shares at $123 a share, and then it was negative for like 2 months. And I'm just like, what is going on, P&G? I thought you were a great company. What? But like I said, I didn't panic sell. I didn't sell the second that I saw the price was going down. I waited and I waited and I waited. And 3 months later, as soon as it hit $124 per share, I sold all my shares and I made like a $3 profit. So that's kind of the mindset that you have to approach these things with. So yeah, I hope that you guys found this video useful. I hope that it wasn't boring. I hope that it will get you guys a bit more excited about investing and showed you the real, true, practical side of investing, and can also help you come up with specific questions on what you guys want to know. Let me know your thoughts in the comment section down below. Let me know what topics that I discussed in this video, and I discussed so many, you guys would like to have full in-depth videos on. That way I don't go just wasting my time covering the whole world of finance when it's not necessarily necessary, you might not necessarily be interested in. But that is essentially how I was able to make money in the stock market in the past few months. that's gonna be it for me in this one. Like and subscribe if you haven't already, and hit the notification bell so you never miss one of my videos. And I'll see you guys in my next one. Mwah.